Presentation. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host for another wonderful day here at TFNN. Even if the markets aren't moving, we'll give them a kick. I don't know if it's going to do any good. Right now, we're up 3 points. We've been low as 20.95 on the S&P cash, as high as 21.04 and a quarter. So pretty tight range, but pretty much what I'd been expecting, and I suspect we're going to see this, maybe a little bit of bump going into Friday. And then I'm speculating that we'll have a gap up on Monday. That gap will be created by a feeding frenzy of an orgy of sycophantic news press about the iWatch, and everybody will still wonder why they're going to get it. And they won't know. All they'll know is they have to get it. And as I outlined in my newsletter, either yesterday or today, it's called the use case. And that is, what are you going to use it for? How is the whole thing going to work? Is it part of a solution? Kind of like I make transmissions for cars, not going anywhere without the transmission, but it's something in line to get a product out the door. Is it a part? Is it a piece? Is it a total solution? If it does, what does it solve? Basically, the use case is why people would buy it. And if they're just buying it to put in their cars because it's a transmission, then it's just another cog in the machinery and probably not going to justify high margins. If it is the end-all, be-all of lead into gold devices, then it will sell on itself without any other people needing to even come close. But, you know, what we're seeing is very light volume. I think everybody's waiting on Wall Street for the big brouhaha, on Monday. And volume saying that we don't have a lot of movement, at least today, coming. 1.9 billion shares. I saw ticks that were wildly high, like we'd crashed the stock market earlier, and ticks that were low, and basically we're going nowhere fast with 3 points higher on the S&P cash. But as I often say, I digress. And yeah, let's get into our history for today, if we can.
That it's all just a little bit of history. That it's all just a little bit of history repeating.
It is a lot of history repeating. On this day in 1963, a patent is awarded to the inventor of the hula hoop, and his a partner who I think designed or had the patent for the Frisbee. And I got something here for you. I think you guys are going to love this on a day that we're going a little sideways. We've got important stuff to talk about, but I want to play this anyway.
Here comes the Shoop Shoop Hula Hoop and the Frisbee family of flying fun. Now, 7 different Frisbees, 7 ways to discover the wonderful world of Frisbee flight. Frisbee, everybody's idea of a good time. Get in on the fun with the Shoop Shoop Hula Hoop, the hoop with the sound. For more tricks, more fun, get the Hoop of Champions. Frisbee and Hula Hoop, sold separately from Whammo.
It came out in 1958, and quickly sold 4 million copies and continued to sell in a huge million share of volume for 20 or 30 years. I don't think it sells very much anymore, but occasionally you can still sell it. And not a bad toy, not expensive, not a pet rock that does nothing, actually did something, and everybody could try out to see whether they're any good or not. The longest verified record holder is Aaron Hibbs from Columbus, Ohio, who kept a hoop spinning for 74 hours and 54 minutes between October 22nd through October 25th in 2009. So, if you don't have a reason to live, maybe you should try to figure out if you could go 74 hours and 55 minutes and give old Aaron Hibbs a bad day. But somehow I have a feeling that anybody that would do that already probably not shooting to cure cancer or come out with a vaccine for polio or Ebola, but probably a hero in his own right. But you never know. Yeah, what else do we have? Frisbee Slinky. Oh, I wanted to do the commercial for Slinkies. I didn't have it, but I always love that song. Slinky, Slinky. There's a great video on Veritasium on YouTube about what happens if you drop a Slinky when it's basically fully, not compressed, but fully expanded. And it's kind of interesting, but high-speed film on it. But I do digress. We probably ought to get into the stock market that's already in progress on most of TFNN.com. Of course, we're waiting for Apple. It's all about the iWatch rollout, and I think the entire market is right now. We've got the dollar index that is higher. That pretty much has, I suspect, is probably the end of the trade with bond buying and treasury buying next week. I think it starts on the 9th for the EU. There's probably going to be a lot of people thinking that the EU is going to be the place to be, and or Japan, because they still have their massive quantitative easing to go through. And, we may have had the last little run where all the cash was leaving Europe, and now maybe they may want to repatriate some of it. We may be seeing some volatility based on that. I think that there's more than an even chance that we do. And I suspect that somehow the apple will not fall far from the tree. But that also means that Apple will probably, I think, signal the high next week of world buying of U.S. stock markets, and they'll look more to Europe and Japan, where quantitative easing has proven to push up equity prices much faster. And we may have a very quiet market if everybody wants to hold pat. My guess, though, is everybody will try to exit stage left. A little snagglepuss there. And as they do so, pull the market back and probably push the EU markets. If you're looking any farther for proof, all you have to look at is at the dollar index, 96.38. I suspect that we are headed to around the $98 level on the dollar index. If you don't know much about the dollar index, it's basically 6 world currencies against the dollar, and most of those are a big hunk is the EU, Canada, Australia, basically Western democracies for the most part. And I don't know what else you can say about that. Other than that, of course, Mark Cuban came out this morning and had some tweets. He's going to be on CNBC in the 4 o'clock hour talking more about it. But I'll give you the nutshell, because I don't think there's probably going to be a lot that he can add that isn't just self-evident. That is that most of the venture capital folk decided that they were giving away far too much cash to us rubes that had to buy stocks and equities. So they started basically buying and selling stock in the secondary market in light volumes to kind of push up the price before it ever went public and show that there was a demand. Of course, people tagged along in second market also. And basically, they're driving up a lot of these companies like Alibaba, like GoPro, others that he mentioned, that are all about driving the price up to get the highest price as it goes public. Now, if you are a company that thinks you've got a long-term goal, probably, you'd like to get as much cash up front. It's probably part of a deal, but I think that there's kind of a inherent belief that at least as the company grows, any investor willing to spend money on your stock should expect some kind of upside in the market. And if you don't leave that upside when the market becomes public, as a public equity, it is problematic. A lot of people have been asking me, where are these long-term stocks? There's a couple I like on the horizon as IPOs, but that's it. Almost all these stocks have been wildly driven up way beyond any kind of conceivable valuation. I think there's probably no bigger poster child out here than Tesla. If Tesla continues to grow at the highest rates that they say so, it would have a decent valuation in 10 years. So you're buying basically into 2022, 2023, and I just can't say that I'm going to make a bet that breaks even in 7 years. It's pretty stupid, I think, and eventually we're going to start seeing a lot of these stocks, as Mr. Buffett likes to say, when the tide goes out, you see who's not wearing a bathing suit. I think you're going to see these out here. Now, Tesla, interestingly enough, horrible earnings, should have been down 60, 70 bucks and was not, because, of course, everybody, this is probably as close to a stock that smacks of some of the dot-com bubbles that weren't truly dot-coms. And there was Qualcomm that was the big favorite, had a real product, kind of hard to value at the time, and of course it went to the moon. There was also iOmega, and we're looking at a couple of stocks, probably iOmega, probably Tesla, definitely Apple, although Apple has much better earnings, that are getting to that level of hysteria of any kind of thing that you'd say against them. I get all kinds of hate mail. And I like to say that I like to live in Realville, and that even if I'm in a stock that I know that's a bubble and it's going to go higher, I at least need to know that I'm in a stock that has its basis built on sand, that is not on a concrete foundation that goes down 30 meters down to bedrock. I want to know, and it be self-evident, I want to know that there's the madness of crowds. And I think what he's saying now is the difference between now and 2000's dot-com bubble before he sold out was that it's just the smarter people that think they're smarter this time always would have an opportunity to exit before these things get out. He thinks that they're going to lose all the cash, and that's going to basically form a huge pullback in a lot of these stocks as they go raising cash elsewhere. We'll be back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we get back here, people talking about the airplane that went off the end of the runway, and a couple of problems. They were landing, the wind came behind them and probably ran them a little long. The runway had just been plowed, and maybe a flash froze. One thing that I always encourage people to read a accident investigation from the FAA. My dad, actually, in the Air Force, that was one of his jobs. If some plane blew up or crashed, to go out and help write certain sections of the accident investigation. I read some of the ones he wrote, but he said that except in very rare cases, there were probably 4 or 5 reasons why the accident happened, not one. And almost everything is designed in flying to have backups of backups, and you've got to have a lot of things go wrong to have them all go wrong. And my guess is after the investigation on this coming out, you're going to find out that they plowed the runway, they didn't then resalt it, the fresh snow on the top instantly froze right after a couple other people already had landed on it, so this guy thinks it's okay. Wind was a little bit strong in the back, that the thrust reversers didn't operate at full capacity. because, of course, they don't want to suck a lot of stuff back into the engine. There's going to be 4 or 5 or 6 things that basically bring back into it. One of the wheels may have had some ice in it and froze solid, so the brakes basically started hydroplaning from the minute they hit the runway. There's always a bunch of different stuff out there. And it's kind of like the stock market. Everybody likes to think that there's a single defining risk factor out there, but it is not. It is almost always a variety of things together. And if it won, probably stock trading would be a whole lot easier than what we see out here today. Now, not a lot of movement, of course, in the indexes. We've got some movement in some stocks out here. Not actually sure how this is pronounced because I haven't heard anybody pronounce it yet, but I'm going to call it Mashirish. MAC is the symbol on it. What's going on with this one is there's a lot of rumors circulating that it's a takeover target by Simon Property Group. Of course, it is a REIT, so who knows? But this thing took off with a decent sign of strength on the 19th of November. It's been kind of playing around at these highs. Nice volume out here today. Question is, if this is not real, my guess is that you're headed back lower. So kind of tough to think that if you were long this thing, it would be time to ring the register. And maybe you just be a little greedy out here if you're hoping that they buy out at a higher price than this. And you're trading it. If you're investing in it, maybe you hold it for longer, but kind of tough for me to see out here. Potash names are lower following disappointing earnings from Russia's big stock market. They're I think it's Ukrali. It's like Ukraine, but with a Kali on the end of it. Basically had very disappointing earnings. And the thought is, of course, that we're going to see lower prices over here or more competition as they were blowing out stock last year and pretty much justifiably for lower prices. But they wanted to put a hurting on U.S. Big potash names, and certainly the Mosaic is one. But it's all about Russia, and the thought is that they're going to dump a lot of potash to start drumming up cash since there isn't a lot of oil out here. And maybe also the fact that they'll be able to sell a bit more of it because maybe maybe the peace treaty thing is actually holding, but it's not just individual stuff out here. But we look at pot too, down on fairly strong volume for the average day out here, but right up against the December 16th low, 33.87, got to 34.27 today. So you don't have very far to go before these things start hitting the lows. I know Andy Heck had written that was nasty. Andy Heck had written a piece not too long ago about fertilizer. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com. nadex.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, like I said, not a lot of these stocks are moving out here. Some of the stocks that are Solar City. I've been warning everybody for a long time that these stocks can't survive without subsidies from the government. And they've been kind of going sideways for a while, but it looks more like there's zero chance of seeing additional subsidies. And before everybody says I'm getting too political, before it was the Republicans with the fuel cells. Now it's the Democrats with the solar cells, and it's always somebody's finding some way to get some cash back from some of these questionable deals. I wouldn't mind if all this cash had been put into DARPA and they found a real answer for any of these things at a decent price. But at this point, there is not. Now, basically, we talked about MLP structures, beginning of the year. And we saw all these MLPs starting to show up for the crude market for exploration companies. And, of course, it was all going to be a percentage of any of these high-producing wells out here. And then, of course, everything crashed. My guess is we're probably going to see the same thing, that over the next couple of years, it's going to be I'm not saying these are going out of business. I do say that they're going to have a very hard time. By 2017, these guys are getting nothing. And each year from now on, the subsidies are declining. And that is the dirty little secret out here. I think there was an article out that I saw this morning. I can't remember where I saw it. Maybe I'll find it during the next break. That talked about the big problem out here, and that is that this, compared to even natural gas or hydro or atomic power, it's just really, really, really expensive. And of course, if you believe the Economist piece, which I think is the best argument against these companies, that you're basically have to, because there is no viable way to store this energy, you are basically buying two systems and maintaining two systems to deliver power to a house. And it just doesn't make any sense whatsoever to have a second source of energy that costs more than the first source. And of course, you still have to pay for the first source anyway. Now, if someone comes out with a great battery that lasts for 20 years at a decent price, if the solar cells go up to 60% efficiency from their 15 to 18% efficiency now, maybe that could be changed. But again, I think we're throwing a lot of cash trying to get a problem solved instead of solving the problem. And that would be, that's pretty much it. These alternative energies have been ways to funnel money to political parties and presidents and payoffs and rip-offs that nobody saw. Anyway, it's an eminence front. But I do digress. But, basically, I think the better play out here would be to see these MLPs and short them when they come out and probably get the same kind of response that we got to the crude MLPs out here, where a lot of this stuff continues to be a problem. What else do we have out here? Momo, and I'm not talking about the Museum of Modern Art in New York, which I do like. One of the few out here moving. And, of course, it missed Q4 consensus estimates by 12 cents. Beat on revenues, but it just doesn't look any good. And, of course, this thing, you just hadn't been out here this long. And let me read the profile so I don't get it wrong. Mobile-based social networking platform in the People's Republic of China. Company enables users to establish and expand social relationships based on location and interest. And I don't think there's anything else you can say about that. But these things are not, quality of the IPOs lately have not been that exciting. Another earnings disaster out here, ERJ. And Embraer SA. And down on fairly significant volume. There's a high volume low out here. When we go back to the October 31st low of 2013 at $28.31, certainly looked like it had been working its way down there. And, we just have another, another 28, $2? Yeah, $2.30 gets us back down to lows. A little bit of a bounce out here, but we've already blown everything away with volume, so there's not a whole lot new there. Produces and sells jet turboprop aircrafts for civil defense and aviation markets in Brazil, North America. And in Canada, I think is where they're based out of, right? And Brazil? Yeah. I think they've got a small plant that's not too far from the Canadian manufacturer of airplanes in Canada, but their big claim to fame is being a Brazilian aircraft manufacturer of small jump jets to go puddle jumpers, big props, turboprops, that kind of stuff. They've been around since 1969, so it's not like they're new, but normally if you're thinking big and boxy and turboprops, you're probably thinking about this company out there on the runway. But a lot of volume. My guess is that there's nothing good to be had by being in Brazil, and nothing but higher prices and existing problems. And I would say that you probably have an 80% chance we see this October 31st, 2013 low handled fairly quickly from ERJ. Let me clean up my desktop here a little bit, see if we have anything else. GEF, another mover out here. GEF. Okay, another huge move down today, this time in Grief. Is it Grief? Griff Incorporated. Down on monstrous volume. Did not hit the low from just a couple of weeks ago at $36.88. That had 1.1 million shares, but we're already way into that with 1.3 million shares. Let's take this back a little farther and see if there's... yeah, I mean, you basically have blown through 2 or 3 years of lows. I don't know what else is out here. How much farther back can we go? There's a huge gap out here at about 34 to 35. See how far this thing goes back. Okay, so this thing has a big gap, double gap actually, back in 2009, and this is coming off the lows of 2009. This thing gapped down on the 30th of March 2009, and that was what 436,000 shares. Kind of started to go back up a couple days later, then it gapped back over that gap down on the 2nd of April with 400,000 shares, and that gap has been open for a while. But that looks to me like that's probably where you're looking at. But you know, $27.07 looks where this would come out at over the long term. Produces and sells industrial packaging products worldwide. Company's rigid industrial packaging and services segment provides rigid intermediate bulk containers, closure systems, transit, and yeah, I think all we have to do is look at the Baltic Dry Index and some of these other companies that make packaging to see that a lot of things are not heating up. And in fact, in this business, looks like it's cooling down somewhat. See what else we have out here before we get to the end. Let's get back to something like that. AR, Mo's, a couple of buyouts, Mac. We did get to KR, so let's take a quick look and see how this one was being received. Beat Q4 consensus EPSs by 14 cents. Reported revenues in line, guided fiscal year 16 above consensus, and a nice little pop out here for Kroger. And I mean, you got everything you want. I'd like to see a bigger candle out here. Kind of tough. This thing isn't really blowing through the February 18th high at 73.60. But given today, probably not a bad move. Up on 9.6 million shares already. So you have broken the previous high with lots of volume. And supermarket stocks really running the last little bit to tell you a whole lot of other things going on. So I don't know what else you can say. That is apparently the Tiger's Den making that sound. And short of me shutting down my computer, it will not quit. I don't know why it's doing that, but apparently that has been an issue all day long. It's the Hotcom server issue. So what else can you say? Yeah, let's see if there's anything else. That's kind of what I'm looking at out here. Let's see if there's... let's take a look at Apple real quick and just see. I had looked in the last couple hours. Down, volume kind of picking up more than a few days ago. Again, my thought on Apple is that the sycophant Apple press who knocked some people down going to, let's try this. Knocked people down. Hopefully I've got my chart back up. Apparently Hotcom is causing problems. Okay, let's get back here. Okay. In fact, I think I brought it up on Tuesday, and that was Apple having an issue with a lot of fraud in its Apple Pay systems in Europe already. And why it was good for anybody that used Apple Pay, because they weren't responsible. And it was good for Apple because they weren't responsible. It's been pretty much horrific for the banks because they have been basically responsible. And today's news, probably a little bit more bad news, and trying to get this out before the big the iWatch issue on Monday. Apple's very good at managing its news cycle and dispersion of bad news. Of course, the bad news today was that they are not getting parts. At least that's the story, not getting parts for their almost 13-inch iPad that was going to be going to the medical community, and IBM was going to be selling tons of these for Apple. And, of course, a lot of people just saying, maybe that's too big of a device. Maybe it's not something we need. And at the same time, so we never know what the real story is. They're saying that they can't get enough product to make the bigger iPad. But I think that's probably, it's pretty easy to make a lot of those. They're blaming yield, and that means that they, if you've got to make one and then throw another one away, it probably doesn't pay for itself. But I don't know of any technology, unless they're doing something really weird, that yield has been a problem on any of them for these displays. And of course, Samsung, their biggest manufacturers, it doesn't have any problem. So, and like I said, unless there's something really big going on I'm not aware of, it sounds to me like just the declining sales in the iPad market mean that Apple may not want to bring this out ever, if at all. And that's kind of the weakness out here. A little bit more volume than yesterday. But my belief is they just wanted to get all the bad news out here and maybe get the stock pull back a little bit and then make everybody warm and fuzzy come Monday when that iWatch comes out. But volume up a little bit higher. I don't know if everybody sees that the Emperor has no clothes next week with the iWatch. Maybe they do have a great use case. But it would not be the first time that Apple kicked out a product that didn't have a great use case. And the primary example is the Macintosh came out. They spent a huge amount of money, including the first really well mass-produced ad for the Super Bowl in '84. And basically, they were getting into 1986 when a gentleman from, I'm trying to remember the name, Aldous came in and was, he had in his hand a nice little disc, and that disc did desktop publishing with the laser printer from Apple, and suddenly all their problems were over, at least for a couple of years. But basically, they'd run themselves almost into bankruptcy before that had occurred. And after recovering from that, getting lucky because someone else came out with the answer for the Macintosh, Steve Jobs was gone, of course, in '89 for getting them into that predicament. I think they're kind of in that same way again now. They're hoping someone brings some killer app to justify the use of the iWatch. Maybe we see it Monday, maybe we don't. If they don't, look for this to be a short ride on the Apple bus. We'll be back in a minute.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, we had, what can you say? Big short come out in the market and drop a lot of news on Tesla as it got up to about 205. Big man of the street came out and said he was shorting Tesla. So it kind of came back down and is lower, but still over 200 bucks. Not out of any specific range, but I'm getting a lot of these people that are saying, you know, we're putting a buy or a sell on stocks out here this week. To me, they all look rather self-serving. And I don't know what else you can say about that other than that. I don't know if you can trust anybody in this light volume environment to give you the square deal. But got up to about 206, got down to about 200 bucks. But there's a handful of stocks that are like this that have been moved around by upgrades and downgrades this week. My guess is that the reason for the downgrades is to try to get as many uneducated traders short before we have a small pop and try to get those as natural buyers in any pop we get in the next few days. My guess will be that as soon as those people cover, that will be the top in some of those stocks and offer an opportunity to get into them. So I continue to think we will be seeing a pop in this market Monday, Tuesday, Wednesday on the back of Apple. I'm figuring we'll hear a lot of stories. There'll be no end to the amount of Apple people standing in line. But although I think that happens April 6th I think it's April 6th, they become available, which is always a good thing to have on the calendar when these guys get busy. Yeah, that'll be Monday, April 6th April 6th. Those are supposed to be available. So we've got about a month before they ship the iWatch, but the rollout's going to be there, and they may even be available a little bit early. So we'll keep an eye on that. But don't know what else. Let's go back to some of the bigger stocks that I wanted to see how they were doing. Amazon, who always says they'll deliver my package in 2 days, has not. So I'm going to look at them today. My heat gun from Weller is not here so far. It was supposed to be here yesterday. They're usually pretty good about delivering on time, but have not so far. Nice little gap. This thing's kind of trying to get up to it, but the volume, like the entire market, continues to shrink as we head back down. I don't know if you can make a whole lot of it other than it continues to hang up here at these highs. I continue to think that we've got probably a little bit more fill to go in Amazon. I love the company, but you always need to separate the stock from the company. And to this point, you want to see some kind of sign of strength as it gets up into a massive gap down. Volume down was about 16 million shares. We just really haven't had that kind of volume, maybe 3, 4, or 5 million shares in the last week or two. And you're probably going to need a little bit more. I think that Apple could open up with probably some prognostication on Apple, gap this market up and gap a few of these stocks with it. If the volume comes in and we find people buying, then wait for the retrace. If it comes in light, you may have a very short opportunity to pull the trigger on shorts. So I'm pretty much in my daily investment letter, all cash, and more than glad to sit on my hands for a couple more days. I think the fat pitch is coming next week, one way or the other. It's either going to be a fastball or a curveball. But we need to wait until it gets out of that pitcher's hand to see what it's going to be. In the meantime, sell when you can, not when you have to. We'll catch you tomorrow, same bat channel, same bat time. Hang on for Tom O'Brien on most of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.